Those were the headlines that we're tracking for you this evening. But on what's brewing today, edtech unicorn Byjus has raised $250 million in a fresh funding round with participation from existing investors, including Qatar Investment Authority. Byjus, which counts Sequoia Capital, Tiger Global, Tencent, Naspers, General Atlantic and Lightspeed as its investors, hasn't disclosed the complete list of backers in the new funding round. Last valued at $22 billion, what also remains unknown is the valuation given to Byjus in this round. Although a source did tell Money Control that the funds were raised at the current valuation. Now, the fresh capital infusion comes soon after the company announced plans to lay off 2,500 employees across teams while enlisting a slew of optimization measures to hit profitability by March 2023. For FY21, Byjus losses widened by nearly 20 times to 4,559 crore rupees, the worst bottom line figure among all of India's unicorns or startups valued at $1 billion or more. Now, the startup's founder and CEO Byju Ravindran said in a statement, and I quote, "Byjus is now at that sweet spot of its growth story where the unit economics and the economies of scale both are in its favor." He further added that regardless of the adverse macroeconomic conditions, 2022 to 2023 is set to be our best year in terms of revenue, growth and profitability. At the time of releasing its FY21 results, which was delayed by at least 18 months as Byjus adopted a new revenue recognition mechanism, the company had said that it clocked 10,000 crore rupees in revenue for FY22 unaudited. That's a 4x jump over FY21. Now, while the top line guidance is strong, all eyes will be on the bottom line after record losses in FY21. As fresh funds come in, Byjus has once again reiterated that it is on track to achieve group level profitability by March 2023 as it lays off 5% of its 50,000 strong workforce, consolidates all K10 India subsidiaries under a single unit, retargets marketing budget towards overseas markets and reduces the feet on ground. Now, robust businesses can weather any storm, says Nikesh Arora of Palo Alto Networks. The former SoftBank executive was the key driver behind the Japanese firm's India investments, including Ola, Snapdeal, Oyo, Grofers, among others. Shireen Bhan was in conversation with Arora and several Indian startup executives who all believe the long-term potential for emerging businesses in India remains strong. Take a look.
One thing that has stood the test of time, you build a strong, robust business, you can weather any storm that comes your way. You could be unlucky that you're building a robust business and there is no capital in the market to be had. I still believe there are phenomenal sectors in the Indian economy which are well served with technology and automation than with purely the labor force that we've always had in this country. So I think all those things are in the right direction. It just means that any entrepreneur who was looking for a quick exit at a lofty valuation is going to go back and have to work hard for the next 10 years. The sellers still have indigestion. I don't think the sellers have quite realized that the world is now different and they're not going to see those valuations for a long time. I think the entrepreneurs who raised money at a high valuation still haven't run out of money. I still believe they have a bunch of money in the bank. So I think entrepreneurs aren't ready to sell at a lower valuation yet.
A pretty positive place to be if you can really prove product market fit, you can prove solid unit economics, and demonstrate that downstream with scale. I think scale is the biggest problem, right? How do you scale profitably? That's the problem statement that a lot of startups can address very interestingly at this point in time. But at the same time, capital is going to be starved. I think we are going to see a year where the amount of influx of capital this year will be a fraction of what we saw in 2020, 2021, which was pretty insane, if I could use that word.
I think this is the greatest moment next 8-9 years for India and for Indian startups. The way we see it at Paytm Money, for example, is a capital market player. And I'll just give you a few examples. India, I think, is just getting started, right? So today, leading brokers, top 10 people would do anywhere from 1 million to 7-8 million transactions a day. I think that's going to explode to 50-60 million, right? And that explosion is about to happen. As that explosion happens, technology is going to get really tested in India. Because the way we talk about technology, the way we talk about security, we talk about it in isolation, right? But India to go from a 5-7, like we do 1 million trades, for us to go to 50-60 million trades is a challenge on technology. But I think that's the greatest challenge India is geared towards and Indian startup founders are geared towards. So I really feel that while the world is in this washing machine, we figured our way to get out.
Well, logistic players are seeing nearly 40